Hi everyone, Tim Knight here. It's Thursday evening as I'm recording this. The Apple news is well out there. It's been out for a number of hours, and incredibly, here and there, I don't know what it'll be like by the time you see this, but the ES has actually managed to pop green here and there, in spite of Apple's wipeout. The NQ obviously is still down, but only down about half as much as it was before. So quite interesting that the I'm not sure what else is going on in the market right now. Something's going on with the Japanese yen, but the Apple disaster, as of this moment at least, seems to have been highly mitigated. But I thought it'd be a judicious time to go through the indexes, because October was insane and fantastic, and this week has been all about the bounce. And Friday will be doubly interesting because not only do we have this Apple news behind us, but the unemployment report will come out an hour before the open. So we'll see if the bounce continues or if 4 days is all they get. So let me just thumb through a few indexes here. The first one isn't really an index per se, but here's the VIX volatility. And I've got a line here at about 17, which is kind of my line in the sand. What I'm hoping is that we're sort of in a new era of volatility here. We had spent the vast majority of the year grinding down in the low teens, sometimes even sub-teens. We almost got down to the single digits at one point. The nadir here was August 9, got down to 10.17. That tripled almost within weeks. So the peak so far was October 11, and so we've come down very rapidly. Just on Monday, I guess we peaked at 27.86, and we're back down in the teens now. So anyway, let's look at some real cash markets here, a handful of them. Dow Jones Composite. Now this one is extremely interesting because we've got this triangle pattern here, and we had cut below it, and we're back inside of it now. And I've got these three horizontals drawn. This one is nothing brilliant about it. It's just anchored to today's high. The please God don't let it get past one really is way up here. So we'll see how much strength carries. My view, as you can see from this more distant image, is that this was a pretty important break. And again, praying to the market gods, what I would like to see is a trip down to this apex down here. Now, the Comp Q, the Nasdaq, which will obviously be much more influenced by Apple tomorrow, a little bit of the same deal. Here again is a not particularly important line. This was today's high, although unless things completely turn around with Nasdaq, I suppose it'll hold, given what happened with Apple. But kind of the same logic that this trend line here, which goes all the way back to the important March 2009 bottom, hasn't been tagged yet, although we have broken this intermediate term trend line. So my view is that we really need to traverse down to tag that line for more lasting support. Hopping back into Dow land, here's the Dow Jones Industrial Average, and we have come up about 12 or 1300 points in very short order. We still have this broad series of lower highs, and the please God don't let it pass this is 25,817. This is a blue line right there. Frankly, I hope it doesn't even get close to that. But my hoping doesn't have a lot of influence over the market, I've discovered. Now, the Russell had a very strong Thursday, and this graph is actually, for me, a lot cleaner to read. It's interesting because I remember, it doesn't even seem like that long ago, watching this symmetric triangle. And I had said on my Tasty Trade program, if we can break below this, then we've got a chance. Well, break it we did, and when we did, I mean, once that apex was broken, it just collapsed. It lost hundreds of points, and it got so far down, it's powered higher. But this is the key right here, around 1551, something like that. It's not, etched in concrete. It's sort of my best guess. Technically speaking, the more important line is this trend line right here. But this horizontal line, I think, is a decent guide, just as this one was a guide. And in that instance, we didn't even get that high. But you can see, collapse, partial retrace, collapse, partial retrace. we just want to see this resume and work our way down toward this more important March 2009 line right there. Now the stocks, especially my premium users, know how obsessed I am with the semiconductor index and using slope charts, completely spiffy new polygon tool. You can see here the break and the retrace. I actually did short a couple of semiconductors for the closed day. I shorted Cypress and Micron, and those hopefully will do okay because the tech news from Apple, it tends to depress semiconductors. But once again, you can see here, watch, peak, lower high, lower high, lower high, lower high, lower high, lower high. So just like so. The transports, actually, these aren't in any particular order. I'm just kind of jumping around to interesting ones. Dow Jones transports, very interesting chart here. This is the break below the Jan 2016 trend line. And as before, lower high, and in this case, I've got a line here at 10,407, which should be a barrier to this retrace, and a repulsion from that really opens us up for a much nicer drop. Now on the S&P 500, we're going to zoom in here, and you can see a trio of horizontal lines. The most recent, as you can see, today's high was just about equal to the levels we had seen when the big fall started on 1024. So something around, let's call it 2750, just as an approximation of what I'm hoping will be the exhaustion point for this big bounce. The bounce started, really the low on Monday was the commencement of the bounce, and we had a reversal Tuesday, and then Wednesday, and then today, of course. So you know what? Let me just see if I can peek at the. Okay, well, I'm peeking over here at the intraday stuff, and at the moment we're down 55.75 on the NQ, and we're actually red barely on the ES. We're down 1.75 as of this recording. So I'm really not sure what monkey business was going on with the US dollar JPY, but that had something to do with it because the Nikkei went just exploding higher by about 300 points. So whatever, you know. So anything else interesting? Let's just close with the XMI, I guess. This is the major market index, and our line here is at 2516, and we cracked this trend line, and we've come at the underbelly of it. So we want to see, ultimately, I would think, a trip down to this 2300 range right there. So anyway, all in all, there's hope still. There's hope. I don't want just one great month and then we're back to this bull crap again. Let's get something more lasting, like, I don't know, years. So this Apple news is a step in the right direction. So I hope some of these index charts have been of aid to you. Thank you for being part of Slope, especially my beloved premium members. It was a fantastic month for subscriptions, and I hope you're getting good value of money out of my hard work. See you later.